Good morning. This is London with Bitcoin Spike and VIP Trader. We are going to discuss the open of New York for Tesla. We're going to discuss it for NVDA. We're also going to discuss it, of course, for Bitcoin, our mainstay. And this is London. Former hedge fund owner, private non-SEC, not financial advice, Duke University, Harvard Business School. What's going on, guys? Well, hello, traders. We are looking for a breakout. Waited a bit here, spending some solo time as we were looking at the patterns in play on the lower time frames. Just going to remind you that we have a critical potential breakout in the mix today for Tesla. Could be up and over just the classic pattern formation of the cupature and that handle. Pattern framework looking like that expanding volatility equation is trying to hold with its own breakout over on Tesla preceding level, preceding lateral level. Okay, we've dealt a lot with on the last couple of days preceding lateral pickups. I'm going to go in the back and make sure on our specific trade group that you're all aware that we have a live stream ongoing. There we go. And in terms of the action to the upside, this would be a big decision for Tesla and for a potential, let's say, for the traders to push out, up, and above on this pattern, because it would be unequivocally bullish to the extent that we have a few mitigating patterns and circumstances that the bulls have taken note of clearly. We have on Tesla the specific upward sloping line here, okay, in terms of the channel formation. We're always aware of the fact that such could operate as a bearish flag, move to the downside, upward sloping channel, or a specific channel formation could operate as a constructive element within the specific dynamics of the pattern that is being fulfilled. So an immediate breakout required up and over. Let's go to the 3 minute. Let's see where we're at on this 3 minute as we see the buyer stalling out just a bit in terms of that real breakout move. Let's just take a look at the degree that the breakout would actually reinforce as we were to look at this, or the measurement on Tesla. Let's then look at the measurement on NVIDIA, and let's discuss the specific measurements and thresholds as they may be applied for correlative purposes, of course, our primary agenda. On Bitcoin, we're going to look at a 12% move. I'll quick draw that range percentage. We know that the max probability percentage completion will be what? 50% typically, based upon not a guess, not a wild idea, guys, but the percentage fractional completion maximum to the 50% is going to be in line with the preceding empirical data, the largest studies that we've seen in the field thus far that are publicly available. Shout out to Tom Bolkowski. Tom, I hope you're doing well. Pleasure to be in communication with you. In terms of the specifics here, level of resistance, let's talk about this potential domino, okay, effect that we could get in terms of a breakout leading to a breakout. This is really part of the reason why this is just a big potential move. Looking at Tesla on the larger time frame, let's say that 30 minute, for instance, we have a constructed, while defective, look at a bull flag with a curl in feature. The specific bulls engaging, handing off to the bears, back to the bulls, back to the bears. Now the bulls have engaged. They're going to have to breach this top line resistance, and yes, we'll have a bit of a domino effect if and to the extent that we can get up and over this specific level here. And go ahead and go to your hourly time frame. Let's look at that hourly time frame. This will be the litmus test. As you look at your hourly time frame, there will be a caveat on Tesla as we're looking at 1% move to the upside, the breakout attempting to hold. What we will say is the following: as you're looking for this potential domino effect up, out, and over the 50%, this is important, the 50% of the move at the cupature and handle, which is trying to break out currently, would lend us, guys, on a max probability basis, lend us to a max probability move in terms of probabilities to the, what is that, 277 and 2 cents. I want to make sure I got that right. The 277.2. I've got another line obfuscating that just a touch, but that $277.02. So to the extent that we're on the hourly, I'm going to encourage you to look at that time frame, because this will be a key candle set up and over. Okay, looking at the hourly and the need to set the bulls to establish that candle set up and over preceding level of resistance. We have some additional dynamics that are in work, but this would be a big move. Understand, not just on this particularized cupature and handle on the micro, but looking at the overall entirety of a larger potential move. And we see these being structured in. If we're to forget the bull flag formation for a moment and take the most immediate pressing. And this is going to be the first real crux area for Tesla, if and to the extent that we can get out, up, and over. Pay attention. The specific additional step that would be included here within this micro cupature and handle, within this V shape, but still cupature, and that handle which would be formed with the breakout required. Let's call that a 275, 276, really, about that 276 at that prior pivot. You just see that we have the opportunity for bulls to push up. Thereafter, we would have the opportunity for a larger push-up just based upon not this preceding move to the upside, but that amplitude move here. That would be a significant move. Okay, the opportunity to operate up and above the specific 276.33 would be a significant move. The amplitude from the low to the high, while this seemed very aggressive and unfavorable to the bulls, this move to the downside gave us a rebound trade of 30%, about 29%. So to the extent that the traders are currently assessing this domino cascade feature here and the need to get up over and maintain, first of all, the 262.75, yeah. Thereafter, we have a specific angled level of resistance on Tesla, and this is important. Good morning. Hope you're doing well. Looking forward to this this nice trade action today. Yesterday was very nice. Good rebound, great trading. And to the extent that we have let's say a preliminary breakout level which needs to be maintained. Okay, let's discuss that in the context. Let's put a horizontal line on the chart. Okay, we need to clear that 262 and hold. We need to clear the specific 276, call it 276, guys, 276.45. Let me go ahead and you can probably see the white lines quite well, so I'll leave those as white. And noting the specific level of resistance, that specific, guys, the level of engagement with the pairs, it's really, you've got an obstacle course set up if you're a bull. Noted, you've got an obstacle course literally set up here, but you've got the possible framework here. If you're looking at that max probability 50% hit, you'll have some targets and a rationale here to domino this, and I would just knock one over and they continue to fly to the upside. Looking at a repeat maximally here of a potential, let's say of the potential 30%, or at least half of that. We would expect, a move potentially. Now that's up and over this line. So if you were to look at the fractional completions, let's draw this up to this higher level, and really the max move that we could get. And again, we've got an obstacle course in front of us, but I want to go over these real quickly for VIP. Looking at that, you're looking at another 30%. Okay, so another 29.63% added on to that original 30% move from the drop to the recovery. Very important to look at. Again, we're getting additional amplitude in terms of that volatility move to the upside, right? Because it's not just this stacked on top. It's actually, we're getting the benefit of this move as well, which means what? Which means it's harder to make returns, the percentage profit, the higher that we go. We know this, right? The higher that we go in price, the more difficult it is to achieve the same level of returns. Just to reinforce that, this 30% move, the $65, if we take this down here, is really a 60-70% move, right? At the bottom here, a 65% move. So as we move up in price, that same amplitude move is more difficult to accomplish the same amount of returns, right? The benefit may be to the extent that we're completing patterns, they're more consistent. Okay, we could find some the cup is half full arguments on such. Let's dig back into the lower time frames now that we've properly assessed those measurements, those requirements, and the specific patternings in play. Watching this level of resistance, this is going to be a day when Tesla's going to have to literally get up, out, and over and just manage this obstacle course. It's going to have to show literally what for. You're going to notice, obviously, in addition to this expansion of volatility that we will pay attention to every single time, right? We want to pay attention to and rank number one expanding volatility without a doubt each and every time, right? Now, you're also going to say, well, yeah, but there's also an inverse head and shoulders. No problem. We got it. Huh? You can see the patterns. Do they need to be drawn out all the time? When you're trading quickly, you're not going to have time always to draw, hit and pull and search for your tool, etc. So that speed of operation, the speed with which you're able to synthesize the information and put it in an immediately digestible and actionable plan for you to really hammer into, guys, to take advantage of, is ideally the trade tactic suite and skill set that I'm trying to immediately bring to you. Okay, as we delve into the markets, as we operate quickly, I want you to be quicker, bigger, better, quicker, everything in terms of your operation in the market than the next guy or girl. Okay, and it's just it's a game where speed counts, where proper analytics count, and to the extent that we have those dynamics in play, I just want to encourage you to continue to work on your skill set, develop such, and don't become complacent. The biggest thing I can encourage you: do not become complacent with where you're at. If you know that there are deficiencies, let's say just areas where your game could be improved, I just want to encourage you be on the record as encouraging you to increase your skill set. Always, okay? That is going to be the mark between guys becoming a champion, let's say that, instead of championing the markets, we'll say becoming a champion in the markets. That is a critical distinguishing fact, are those who are prepared to continue to up their A game. This is the bottom line, right? When you're seeking alpha, that percentage by which you beat the market, I want to further reinstill those parameters in you, whether or not it be consideration of additional confirmation elements. Looks like currently we have some green on the screen. Let me go ahead and clean up some of this so that we can have a little bit of a better picture on Tesla. Let's look at this is a nice chart here that we have drawn out on the 3-minute time frame, and you'll just see that dynamic in play with the curvature and that handle, and everybody's like, "Go Tesla, get up and out, bring the heat." It'd be a nice day to see a 4 or 5 print on Tesla. We agree in terms of the percentage gain. We're at 1.59%. It'd be a nice day to see a 4 or 5% print on Tesla. That would be nicely done. Now, in terms of breakouts and targets to the downside, right? Is this the ideal time to get involved in the trade to the upside? We're going to argue that it's not typically, right? With a stop loss, yes, it's a tactical, procedurally reinforced level of engagement or appropriate tactic that you would see in terms of the authorities, in terms of the technical authorities, reminding you that a breakout trade with a stop loss is encouraged many times, but to the extent that pre-positioning at all in the move, catching a specific move early on would be the notion if you have your dynamics in play in terms of your momentum, right? And just going to encourage you that to the extent that you're going to see some elements in play as we look at being just past 15 minutes into the trading day for New York, the 15-minute, 20-minute time frame. The 15-minute time frame, the 20 moving average, easy for me to say, in terms of that. A little distracted by the price action, looking at the cross differentials here. Nicely done in making sure we don't have that gap unfilled on the 15-minute. So nice to see the action at work. Let's back off into the 4-hourly. Let's take a look at this specific 4-hourly and really the fact that the cap line did engage, didn't it? That 4-hourly cap line, we see it all the time. That specific 4-hourly really held nicely. That was the key feature of yesterday. Was it going to hold? It did hold. To the extent that you still own that 4-hourly, congratulations. Now, immediately in play on that 4-hourly, I will just encourage you, we have a bit of an abridged, we should actually say an extended look at a symmetrical triangulation. It's not to overcomplicate the patterns in play, but it's to discuss them within the realistic expectations of an idealized pattern versus something that is a bit lackluster in terms of a specific extended kind of the curl in this neck feature, which has extended out into more of the specific bull flag interpretation, which we're fine with trading, but we do have that symmetrical notion here, and remember the fractal as well, but that symmetrical notion in terms of that closeout could complicate the dynamics, particularly on this specific pattern, just in terms of a potential, pay attention, a potential carry up feature, if and to the extent that we can get up and over, right? We see a nice alignment here, levels of resistance that can engage. We see again across the top here that the traders may be very inclined to engage in a multiplicity of levels as we really, if you will pay attention and work this into the dynamic construction of what you are looking at, we really had a dynamic level pickup here, okay? And we had some flex options in terms, or variability options in terms of the level of pickup, and really had to cut through quite a bit of price action here on the lower side to call this the quote unquote the pickup based upon a parallel carry down feature of this 4-hourly chart. It became an aggressive, let's say a variable pickup, okay, given this bottom side lead in. Essentially that's telling us that Tesla could have gone a little bit lower, right? Could have potentially gone a little bit lower or dug a little bit less deep in terms of the extension of this specific flag. And I'm just going to note that as a characteristic of the equation as we look at this extension here within the consolidated framework here. And are we to just note some variability in Tesla, as we always do, and encourage you to not be afraid of Tesla, but to respect its volatility, much like Bitcoin, right? Much like Bitcoin. We'll take a look now at Bitcoin as you understand the dynamics in play. Looking at that specific 4-hourly, nice to see that momentum rising. That's to the credit, guys, of Bitcoin and Teslas, that we can achieve some volatility for purposes of, guys, review alone, practicum alone. Some of you are traders, seasoned traders, etc. Many of you are looking for these volatility moves to enhance your overall participation in the market and understanding of the patterns. You can't get the patterns if price is just moving sideways. When Bitcoin slows down, you know this, when Bitcoin decides to just slow down, we're looking at an hourly green buy line hit engage on Bitcoin now. But when she slows down, right, when the patterns freeze up, they freeze up, and there's no opportunity for you to engage in the market even on an analytical basis, because let's just say Bitcoin had just made a huge move and you happen to miss it, and you happen to be in some consolidated sideways action, and it's difficult to make progress in that regard without chasing in crypto, without chasing some specific charts that may not even be highly. A lot of times the price action in crypto is going to be on some lesser desirable, quote unquote assets. They may be securities by argument of Gensler, etc. But as you would look at them, they may be highly illiquid. As we look at the specific hourly on Tesla, double bottom is essentially the magnet here that's pulling price down in the context of something that we're not really excited about from a bullish perspective. We've discussed not wanting to set double bottoms. Typically on the way up, we're fine. On the way down, but typically on the way up, we don't like to just march up and set double bottoms. Most of the double bottoms, just the majority of them, will, based upon the last 40 years of backtesting, will break to the downside ultimately. Okay, that's not without exception. If you have a 30% chance of being surprised, you need to calculate that into your analysis of your confirmation, etc. Looking at the 200 weekly, I'll just remind you, while there are contact trades and swing trades here, right, the issue is going to be the extent to which we are long over and short under. Again, we did that back testing yesterday. I encourage you to look back at those specific features. As we look at the lower pro line engage, that specific 8-hourly has been relatively solid. Any crossovers on Bitcoin? What are we going to do now that we have set Tesla up and over, that we have a nice degree of action here? And we really can't call that a bull flag, can we? We just can't. So what proved to be highly relevant in terms of the circumstance, our approach, I just tell you, and this will be the most frustrating thing for anyone. You know this will be the most frustrating pattern that anyone will unless they're willing to just go continually with something, let's say an inverse head and shoulders, and that's fine. But with the probability framework of the increased volatility and those probabilities that come along with it, we are so much more secure and familiar with trading these patterns. Volatility is the reason we're in the market, identifying those patterns within which we have the opportunity to participate at the max probability, right, in the equation, is really the name of the game for us. And we just thank those who have made these trades possible for us, is the bottom line. We appreciate all the hard work that's gone in at the several levels other than us. And guys, the majority of this is, if not all of it, is publicly available information. So, but to the extent that we are critically involved in, and I mean critically involved, highly critically involved in the additional technical framework and development of the markets. That's our goal, to do so in a professional context without overbearingly being involved in particularly not asset or money management or even trade management. Guys, you trade, we're going to trade, and you let us know how it goes. All right? If you have differing opinions, we invite you to share those with us, though I will challenge you specifically, and particularly if you have differing opinions, to show me when, why, where, and what. Let's get into the specifics, because we do a lot of research with the appropriate generators of the data set that are going to be fundamental, and it's on a real hands-on personal level of interaction that I have with let's say some of those particular authorities. Not to call you out versus me, but I'm in contact with let's say, for instance, New York Institute of Finance, to the extent that I am, and there's a question on something I have, I'm likely to go to the source directly. With Tom Bulkowski and the Encyclopedia of Chart Patterns, I'm going to go to the source directly, and on each of those instances, I have multiple bases of reference to discuss such with you on any parameters that pop up that we would again critically look at. So I encourage you to critically look at the entirety of your trade game, and that's just more of a reflection of the character of whom we are. As I'm going to encourage you today, again, it's a great week to focus on the market without a doubt. I just want to encourage you, if you're busy in life, whatever you have going on, extracurricular or otherwise, make yourself a success in life, make yourself a success in the market. And I will say that at this point, with a 2% move and a breakout pending, really, guys, in process and pending on the 5-minute, nice to see Tesla up and out of the pattern that we wanted to see. I will close out with NVIDIA, stating that NVIDIA, where are you? Okay, we got the hit on the 20 moving average on the hourly. We understand that. But as they play tango, yes, tango between NVIDIA and Tesla, as you've been invited to power back down through into this flag on, and I really don't mind it, because the curl-in feature, that extended level, that handoff from the bulls, right, who didn't want to push up to the top on NVIDIA on the 1 minute. It reminds of Tesla, doesn't it, on the macro? But the bulls really didn't want to push in all the way to the top framework of the resistance, did they? They just didn't. Right, the bulls are the quick handoff, right? Quick handoff back into themselves, right? Then powering up to a handoff to the guys to a resistance, then accepting the handoff back from the bears. Bulls engaging again back to the bears, back to a mid-level bull. So the bull's a little bit inconsistent on NVIDIA. Like, who invited you to this party, right? We started asking NVIDIA, hold on, who invited you to this party? And don't tell me that you're going to pull one of these up and over the top of this, because we can deal without that complication in terms of a broadening top. We'll take the flag. But show us you want the flag by a strong power in to the level of resistance, hand off to the bears. Don't creep up along a level of support. That's not bullish activity. We'll take it. We understand it. We can draw it, but it's not, guys, come on. Who invited you to this party? NVIDIA. NVIDIA is the reason for the party. You guys know that, along with Tesla, along with Bitcoin. So we're excited about the interaction, interplay of those key concepts. What we don't know is, I don't know, guys. It'd be pure speculation, huh? I mean, in terms of the coin master of Tesla, the departure, we've got some overlapping here in terms of even the mining, the crypto, Bitcoin, and NVIDIA chips, right? We've got all of this really set out well for us to digest this in terms of correlatives, in terms of those cross indications, or just fundamental overlappings of the technologies. We're paying attention to such, and we're excited to cover NVIDIA, Tesla, and of course Bitcoin on the open, and the market open. We of course are going to pay attention to the equities a little bit, because hopefully they're going to be flying around and give you an opportunity to hone in on your skills that you're currently developing. So in terms of NVIDIA, or that you've developed on NVIDIA, what are we looking at on NVIDIA? Well, NVIDIA, you need to get up and out. You need to follow your friend Tesla, right? Don't be late to this party, right? That's up, out, and over requirement for NVIDIA. Now these would be big moves. Again, potentially big moves. It can also be a bust. Look at your probabilities, guys. Don't take my word for it. Look at your probabilities. But the specific move, okay, say it's a 5% move, potential to the upside. So the market waiting a bit in terms of that level of engagement. These are some significant moves, and we recall the fact that we do have a rising wedge here that we're really going to need to get some momentum on the hourly. We've been dropping, noting that on the momentum on NVIDIA. 4 hourly also needing to pick up, so we need that double clutch band that we got in this zone, without a doubt. So if you're backed off in the market altogether, just practicing on directionality, I would encourage you to look at and hunt for your specific increasing volatility. Find those levels of support the bulls are willing to engage upon and levels of resistance that the bears are willing to engage upon. That's the name of the game. So nice to see the action on the open. Tesla, NVDA, Tesla up 2.2% with a nice move on an expected pattern. That inverse head and shoulders is a realistic, let's say, just more traditionally accepted and recognized. You have to understand, guys, the head and shoulders is the first thing you learn out of the book. True. It's one of the first things that as you get into trading, that you're going to learn out of the book. So that it's more comfortable, I'm sure that it is. It's more comfortable to everyone, but that's not always where the advantage lies in the market. Okay, so I'm going to encourage you to continue to look for issues like expanding volatility, right? That volatility measurement, as you're going to encompass that or wrap that up into your focus in the markets. Just continue to be prepared, and the best thing about it, it prepares you on the upside and the downside. Right, on volatility, you're prepared as a bull for engagement along a downside of an expanding volatility equation. That's one of the biggest safeguards I see in the market in terms of risk exposure, right? So the directionality we generally have, and trade 500 of these. You should be the pro at that point in terms of trading if you're going to be willing to trade 500 of those. So looking at some nice action of 2, 3, 6 now on Tesla, and the potential here for the breakout up and over this line of resistance. Definitely one you want to own a little bit lower, right? But as we work up into the specific, if we were to look at this, now we're into a bit of a discussion if you are plugged into your inverse head and shoulders on Tesla. Why is that? Because you've got that left shoulder, that specific head and that right shoulder. What does that mean? Well, you technically have, while we're trying to break out, you have a confluence with that 50% target measured from the head to the neckline, which is the line between, you guys got it, right? The two shoulders, the pivots on the two shoulders. That 50% is 266.35 is that specific level of maximum probability, okay? The maximum probability does not include the fact that the bulls are, by very nature and fact, going to really push the gusto here and go look for the specific parallel carry from the support up to the resistance. So this is the bull target, right? Up and above that medium grade, though maximized in terms of the probability function that you're going to look at, that 50% fractional completion. I'm just really excited that whatever we're talking about, whether or not it's a soybean corn future, whether or not it's a historical chart looking at the Dow, whatever it is in the rubric of our attempt to master or advance or apply the specific components of technical analysis that we are discussing, issues continually like fractional completion, maximum probabilities, just above and beyond what you would, just a more advanced level of decorum, which are also reflected in our indicators. I look forward to really 2024 is on the books in terms of really implementing and understanding how to necessarily work with all the indicators. We're in go mode in terms of development right now, and it just is a nature, let's say a fact of, let's say our interaction with just a natural level of interaction that we're having with the technologies in play that are new and allowing us to directly, immediately engage in the development of really exciting indicators. So this is London with Bitcoin Spike and VIP Trader. I'm going to let you all go because the market is up and gone, at least for Tesla, with a little bit of a wait and see approach for NVIDIA. Right, so let's dig in the back. We're going to watch our momentum, see if NVIDIA can turn around, if and to the extent that Tesla can hold this breakout. And where are we at, guys? Where are the orders right now? You know, where are the orders? Without a doubt. As you were to contemplate a strong entry here, just know, as a matter of fact, without a doubt, it's not a question of if, guys. It's a question, it's an objective fact that these areas are loaded with orders, all right? So when you become single-sided or single-minded and only looking in one direction of the market, you have to understand that when you do that and become complacent, that other traders are structuring the market around you, without a doubt. Isn't that the truth? Yeah. So we will be back soon, guys, and it's a pleasure to be with you this morning. If you are guys trading, we want to hear about it. This is London with Bitcoin Spike and VIP Trader.